Good afternoon. I'm Jeff Hirsch, editor-in-chief of the Stock Traders Almanac, and this is WealthWise on Biz Talk Today TV. For my latest picks and market analysis, go to stocktradersalmanac.com, click on the login in the upper right, and there will be a link to a free trial. Before I jump into today's special featured guest interview with Ed Fortunato, Chief Economist of Constellation Energy Corp., here's what's on my radar. So we are riding the rally for now, but our NASDAQ best 8 months MACD seasonal sell signal is imminent. Today's close on Friday, July 11th, if we don't gain 73.42 points on NASDAQ, I think we'll trigger if that number's right. But there are lots of bulls out there. I was at the New York City CMT event yesterday. Everyone's talking about the mid-July peak and the August-September weakness. So that makes me wonder. The recent July seasonal pattern for the last 21 years that we have in the newsletter from last night shows that the rally could probably run at least until next week. But considering the outside gains so far for the summer rally, we've compiled some data on the potential magnitude of a summer market retreat. We put a pretty bar chart in last night's newsletter showing the moves from the July highs to the August-October lows, the Q3 low. NASDAQ declined a much larger 10.7% on average over that period. S&P and Dow averaged 7.9 drop, for the retreat there. The max drawdowns, though, was an average of 9.4% for Dow and S&P and 12.6 for NASDAQ. So more detail on that in the issue. But for now, the market still has some room to run ahead of the historically weak period. When we do get that NASDAQ MACD trigger, when the MACD turns negative, we're going to review our market conditions and make any adjustments in the portfolios. So just a few items to keep an eye on. As always, more details at Stock Traders Almanac, stocktradersalmanac.com. Yes, my own website. So let's bring Ed on. Edward J. Fortunato is the chief economist at Constellation Energy Corporation. NASDAQ ticker is CEG. Charles Edward George. Before that, or sort of during that, for 20 plus years, he was at Exelon and Constellation. He went from prop trading to chief economist, nat gas trading at Merrill. Before that, senior energy trader at Edison Mission Energy. He's got an MBA from Boston University, where my sister went. My son's going up to Northeastern next year, my youngest, and he's got his bachelor's in business administration from Baruch, the City University of New York. Also, an affiliation with the CMT, so kind of have a soft spot in our hearts for Baruch. Ed's a longtime Almanac user, and he and I have been comparing notes for several years now. In fact, I was just on his Fortunato and Friends monthly webcast. I think it's monthly, right?
Yeah.
Yeah. And anyway, welcome, my friend Ed. How you doing on this lazy, hazy, hot July summer day, Friday?
It is a lazy, hazy day here too. We're in Maryland, and thanks for having me on. It's great to be here. I can't wait to have a conversation, which I know every time I talk to you, it's always enjoyable. And if you have any questions, I have my Stock Traders Almanac right here. And I got to tell you a story about that. When I was my first job out of college back in '87, I'll date myself. The big shot trader on the desk would buy boxes of them and hand them out to all the youngins. And I got mine and kind of got addicted to it after a couple of free ones, and I've been buying them ever since. When your father was in charge, and now you're running the place, it's good to have, and it's one of those rare books you can use every day. And whether you glance at it for bullish or bearish, I really don't trade or day trade my portfolio much, but even the words of wisdom you get on every day is something to look forward to.
Appreciate that, man. Who was the guy that bought the books? Remember the name?
The CEO who used to give it to me, his name was Larry Whitman.
And the firm was?
Thompson McKinnon.
Oh, yeah. I probably shipped those out of the garage, out of the house back in the day.
Yeah.
That was what I used to do after school.
Oh, that's cool. Yeah. So I just, he used to hand it to me on his desk. I used to drop a report off to the guy who was the president of the company. And, I used to catch him doing stuff all the time. He'd yell at me and I'd just laugh at him because I just didn't know any better. And he kind of liked me. So he used to have me walking around the company with him, like to see people and meet people. So it was a great way to kind of get started in the business.
So, there's a lot to cover, but let's continue with your story here. So, I'm really interested in how you got from Thompson, McKinnon, or wherever it was, up to being a chief economist. I mean, you came into this as a trader. I mean, was that where you started at Thompson, as an oil trader there, or in the
No,
oil?
not at all. I was a commodity credit analyst. I got out of Baruch College and I had no idea what I was doing. My goal was to make $36,500 a year and wanted to work construction. And that wouldn't be done nothing for my back. But you know, I went to Baruch and there was a finance professor I kind of liked. And I was like, what do I do with this degree? I had no idea. Like, I had no clue. And he's like, don't be a clerk, be an analyst or a trader. And I saw a job advertisement in New York Times, and I applied for it, and did okay on my interview. And next thing I know, I was working there. Thompson blew up famously, and they
So
were
that
taking
was the
all my
Thompson job initially.
yeah, Thompson McKinnon. They had a management training program I was involved in, and I took a real liking for the trading part of it. I thought it was just really interesting, and I used to hang around with those guys who weren't much older than me; they were probably a couple of years older, and got involved in that. And then I moved to Bear Stearns for a little while,
Oh
and
yeah.
yeah, and I got to be good friends with a lumber trader who was there, and he took me under his wing, and they moved me out of there, and I went to a company called Metallgesellschaft. They had the famous oil trading
Big German
debacle.
mining company. Yeah, yeah.
Yeah, that got into oil, made a little money, and blew up famously.
They used
Um,
to be big up in the Vancouver patch back in the
yeah,
90s.
and they did a whole bunch of different stuff. They were the world's biggest titanium dioxide trader. They did lumber, they did metals, they did oil. They were one of the biggest on the exchange in the NYMEX at the time. They did a whole bunch of stuff, and they blew up. And when they blew up, they fired everybody, and they needed a trader. And I always wanted to be a trader, so they gave me a chance to trade gas and oil. So I did that for a year or two, and then I took some money from Merrill Lynch on a cold winter. I was so brilliant. I bought some New York gas bases and I sold some Texas gas bases because of my tremendous logic. I thought it gets colder in New York than it does in Texas. I'm going to buy some of that New York gas, and they did okay. And they were still in the process of going out of business after the blow up. And the guys from Merrill called me up and asked me if I wanted to go work there. So I worked there for a while, and that was frankly a terrible experience, but I learned a lot.
Really? How come?
Yeah.
What was so
Just,
terrible about Merrill?
just the people, they were just a whole bunch of high strung oil traders, and they just weren't my gig. And I didn't. I came from Baruch College. I hadn't got my MBA yet, and all these guys are from Duke and University of Chicago, and other places like that, and I just didn't fit in. Like first time in my life, it was a big lesson for me. But I went after Merrill. I went up to Citizens Power, which was which is a boutique oil and gas trading firm up in Boston, and I was there for about 7 or 8 years, and they got taken over by Edison Mission Energy, and I was their trader there, their gas and power and oil trader, and had some really good success. And then they were going out of business, and Exelon picked me up back in 2003 or 2004, and I traded their gas book, their oil book, their power book. I ran the proprietary trading book for a while, and then I was always complaining we didn't have enough fundamental analysis, and they put me in charge of fundamentals too. So I did that for a while, and then the big thing we had was this giant hedge book. We had 20 something nukes and thousands of megawatts of gas, and we had to manage that. Making a few $1 million or whatever it was for the prop book was nice, but the big money was made in the hedge book. So we worked on that for a while with some pretty good success. And next thing I know, we were merging with Constellation about 10, 12 years ago. And
When did
and
the MBA come in?
I started it at Boston University, and when I left Edison Mission, I finished up at Villanova, University of Delaware, and Lehigh. So I got a big taste of all the collegiate schools on the East Coast, finishing it up. So it was the first time I was afforded an opportunity to take some classes on a part-time basis. So I figured I'd give it a shot. And then
So you just go ahead, go ahead, go ahead.
yeah, and then I was working with success or still at Exelon, and they made me. I was always kind of talking about analytics and being smart about stuff like that, and then they were like, "We're going to make you a chief economist," and I was like, I can't even spell economist. What are you guys doing? And what do you call? It's been about 5 or 6 years since I've been doing that now, and I kind of made this my own. I love looking at different things and talking about different things. And I range from talking to the CEO, about markets and stuff to everybody in between and helping out the marketing arm. And we have a giant retail business, and I'm always talking to the retail customers and putting little decks together that focus on either gas or oil or power. You see them, every once in a while. And that's where I am. I love doing what I'm doing.
That's great. So let's talk about the company a little bit. You said you have some retail clients, and I mean, you're talking to homeowners and stuff. I mean, what do you really
No.
do there?
So when I find out, I'll let you know right away. But you know, I kind of do a little bit of everything as far as kind of markets go. I've been doing this for 35 plus years, and I love what I'm doing. And I look at markets, I talk about markets, and we have a giant retail book. We serve more than 2/3 of the S&P 500, and everybody wants me to talk to their customer, their best
So when
customer.
you say the retail book, you're talking about companies that are buying your energy.
Yeah, so we have two. We have a wholesale book, and those are the guys like Morgan Stanley and Merrill Lynch and Macquarie who kind of do energy trading, and those are those big standardized blocks. And the retail business are customers who use our electricity that we sell off our power plants. We have 20 something, nuclear units around the country, Texas, Chicago, Philadelphia, Maryland, that span the gamut. We're in the middle of merging with Calpine, which has
That's
another
up
30.
in New York. That's a New
What's
York
that?
State thing, right?
We have nuclear units up in New York State too. Calpine's down in Texas. They have a big presence in Texas. We have a big presence in Texas also, but they're bigger than us. They have some California assets, and they have some stuff mixed around the country. We have a presence right now as Constellation in all 48 states and in the lower 48. So we range everywhere from serving Tesla for electricity and gas to we have a retail business for mom and pop. So we do everything and everything in between. So we have literally millions of customers.
Do you deliver power? You do gas also, right?
We do gas, we do power, yeah.
Just
And we
like,
and
I
we
mean, they're redoing the gas lines, Orange and Rockland, redoing the gas lines on my street in Nyack. And is that like the kind of stuff that Constellation's doing? Are you going straight to the homes too, or is it?
No, we used to do that with Exelon, right? We spun off about 2-3 years ago from it, or about over 3 years ago now from Exelon, and they're the guys who do the utility work. And they get they do the pipes and lines and wires. We produce the electricity itself, and that's what we're real good at.
Yet you're the third largest holding in the utility ETF in the utility sector, the
Yeah,
XLU.
and
But you're
with
supplying the local.
yeah, and with the merger of Calpine, we'll be the biggest provider of electricity in the country. We'll have almost 60,000 megawatts of power, which is about 60 million homes if you equated it to every house. And of course, we have big companies taking our power and things like that. So we don't exactly sell to every home individually, but we have a big presence in the market.
And you guys are, you boast about being the largest producer of emissions-free electricity, right? Or emissions-free energy.
Yeah, and Calpine does a lot of gas. They have some geothermal. They have a lot of different things, but we'll still be the biggest clean energy provider. But we'll also have a large gas fleet because at this point, you're looking at a 20-year span where nothing really grew in electricity. You went from lighting used to be about 15% of load to about 4% as you went from incandescent to fluorescent to LEDs. So a massive chunk of demand was pulled out of the market. And as such, you started closing coal plants and you started kind of not worrying about having enough power. And we closed about 1,200 coal plants or coal plants themselves, units, over the last 20 years. And we've gone from a situation where we had an abundant surplus of power to things are getting pretty tight. And now that you have demand from AI and data centers and cryptocurrencies and EVs and on and on and on, demand's going to be substantial. And we're looking at a situation where, I think, people prefer like coal or oil or gas or, solar or wind, whatever it is. And I think that the real answer is going to be all hands on deck. everybody's got to pitch in to kind of get us through this demand surge that we have from all these different aspects of business.
What produces, or what do you produce most of your energy with? Is it nuclear, solar, wind, hydro, or is it oil
Yeah,
and gas?
it's by far it's nuclear. We have 20 units. They put out about 1,000 megawatts of power. Every 1,000 megawatts is about 1 million homes equivalent, and so we have enough power we produce for about 20 million homes. So it's a massive amount of power. We also have natural gas. We also have some oil units as peakers, like in the wintertime or in the summertime. We have some solar, we have some wind. But our bread and butter right now is nuclear.
Would you say that the biggest drain or use of energy is cooling? Or, I mean, I noticed that
This time of year, yeah.
I mean, but my bill, my electric bill, it spikes. It's not when I turn the lights on in the winter. It's when I got my central cranking in the summer.
Yeah, and that's the biggest chunk of electricity. When you get the winter time, you basically burning gas, most people, and that's where your big chunk of demand comes from. And a lot of people, the Biden administration had the Green New Deal, and they were encouraging a switch from gas or oil fired generation to electric heating in the home. So that would have increased it also.
Yeah, there's an initiative in the state of New York for new construction to not have any natural gas going into it, which
that's a hard one to do. You have New York City, and they're still burning 6 oil, which is basically residual fuel at the bottom of the barrel on crude oil. It's about the most filthy thing you can burn. And, they want to go right from that to electricity. But you probably need to make a stop with gas in the middle. And one of the things we've seen with the Trump administration is a deal that, they cut with the Hochul, the governor of New York, where she'd get her wind farm approved out in Long Island Sound in exchange for expanding the Constitution pipeline, which brings all that cheap Marcellus gas into New York and New England, and allow an expansion of the Northeast Expansion Project, which brings gas pipelines underground into Long Island and Brooklyn and things like that. So you'd be able to use gas again, and it's just common sense. Like, we just need this stuff.
I think gas is probably the most. I mean, nuclear, I'm a big fan of. I think there's still a stigma with nuclear in the minds of regular people, but it's the answer. Is it not?
Well, what's funny? It's more complicated than coal or gas. Like, when you have those plants, you turn it off, you walk away, you leave a coal pile or some gas in a tank or whatever it is. And nuclear is more complicated than that. But at the end of the day, like, you burn vast amounts of this stuff and produce a lot of power, and you're not subject to fossil fuel or pollution. So it just makes good sense. Yeah, I'll ask you a question, and you can answer it. But we've had nuclear fuel for about 80 years, nuclear plants for about 80 years, and all those plants, there were about 110 of them that were built. What space would all that spent nuclear fuel would take?
How much space?
Yeah.
Like, you're talking volume?
Yeah, like just like all these old fuel rods and cast, and they call it dry cement cast.
One tanker ship. I don't know.
It's I've gotten states the size of Rhode Island to Connecticut to things like that. It's actually a football field.
I wasn't too far off.
Yeah, you weren't far off at all. That was a great guess. And at the end of the day, it's stuff we can figure out and manage is what it comes down to.
Hasn't the technology gotten a lot better though?
Yes and no. Like, we haven't built a nuke in this country, really. We did some down in the South, the Vogtle plants, a couple of years ago, but we really haven't built these things. We built them overseas. The Chinese have built them, places, but everything's like a space shuttle with this thing. It's just customized product that's really expensive, and there's a lot of rules. And hopefully, we can build some of these plants and kind of streamline it a bit and speed it up and make it less onerously expensive. Like, most plants, it takes about 1.5 years to build a gas plant. You put a jet turbine down and you build your transmission line. It takes about 1.5 years. These things take 10 years. This whole surge in demand is going to be over by the time we get these nukes built. So at the end of the day, if you streamline it a little bit, and the costs are in the multiple billions. The Vogel plants were over $10 billion. You know, you'll have cheap fuel, but a real expensive, fixed cost. So it's balancing out the fixed cost versus the cheap fuel.
You think the demand surge is going to be over and it's just going to like go down, or just not going to surge anymore? We're gonna hit a plateau for all this energy demand with all the tech and AI and
If
crypto,
it
like you were
takes
saying.
if it takes 10 or 15 years to build a nuke, it's probably not going to be, as urgent as the next 3 or 5 years when AI really kind of hits or goes online, or when electric vehicles come online. You'll meet it, and it'll be less expensive. But the big surge is the next couple of years. You look at all the demand coming online for energy and fuels and stuff. You're seeing, they're talking about AI. A Google search takes, let's call it 1 unit of energy to look for a Google search. These things, AI takes between 10 and 30 times the amount of energy a Google search does. And you know how many Google searches you do every day, or
Yeah,
AI searches. So it's a
I'm
vast.
doing some more AI searches.
Yeah, me too. And as you use it and you get more, used to it, you're going to use it more and more, and it's just going to go up. And then you have quantum computing that takes vast amounts of power. And there was some static so yesterday that one of those big NVIDIA chips, that's like just a small fortune. It's gonna take some sort of crazy amount of power to fuel this thing.
How are you
Whereas,
guys positioned to, supply the power to these new tech needs? And
so we have clean power. We did a deal with Microsoft that we're going to start up the old 3 Mile Island plant.
I was going to ask you about that. Yeah, what's going on
Yeah,
with Three Mile Island?
so we're restarting that. It was in fantastic shape when we shut it down. We shut it down for economics, and we're going to invest a bunch of money into it, make it even better, make it more reliable, make it safer. And we're on our way to doing that. I think 2028 is the year we start it. And you're taking, we announced this in late 24, and it's going to take 4 years just to kind of, put some paint and some paper clips and duct tape on this thing to make it work really well. And so just imagine when you start from scratch. What a big project and process this is. We did a deal with Meta on one of our, poor economic plants out in the Midwest. So, we're making inroads with these guys. And then, hopefully we can kind of continue that. But, it's just too onerous to build these things. Like our CEO has said numerous times that, we're not gonna go build a nuclear power plant. We've seen companies go out of business doing that. It's a really difficult, really complicated process.
Who's going to be building it? Who's going to be able to build those? It's got to be government, organized or something.
The government seems to, regulated markets like the down south, the Duke Energies, the Southerns, the places like that can kind of put those costs in a rate base, so they'd have a bigger advantage than, say, just a merchant power plant just looking to make money in their plants like we are. So those are the brave souls. There are small modular units that they're working on. Rolls-Royce is a big
Right.
involvement in that. There's a lot of companies looking at micro, nuclear power plants that are really small. Like it's a whole spans a whole gamut. And I'm a big markets guy, being a trader and stuff. So I
Right.
believe that the cure for high prices is usually high prices. And what we're seeing in the innovation space is whether it's making more efficient transmission or things like that. There's a lot of work going on to kind of make these
Is it
processes better, improve the process, and go forward like that.
is that where the innovation is going to be in energy, in delivery and the grid? Are they going to update that?
So I'll give you some trivia. It takes about 2.5 units of electricity to get 1 unit of electricity to your house. And a lot of those losses are just pure resistance, right? Physics of the line, the heat, whatever it gives off. And then the heat from the power plant itself, all that smoke on a smokestack is just, electricity.
They're supposed to
Or
trap that and turn it into a cogen plant, right?
Yeah, and a lot of them do that, make it more efficient, but it's not perfectly efficient. So if you can lower that, amount from say 2.5 times to 1.5 times, you have a vast amount of energy available. So people are working on transmission lines. They're working on, room temperature superconductors to make the transmission more efficient. They're doing all sorts of things. There's an advanced geothermal now where you go and trying to dig down miles into the ground and pull that hot material out and warm up water. At the end of the day, basically the one way the most common way we produce electricity is we just kind of heat water up to boiling, spin a turbine, and electricity itself is just static, like static electricity. It's no different than the stuff you used to get when you were a kid when you were walking on the rug and put your hand on the metal. That's what it is, just on a vastly larger scale. And so we need to boil water. So if we have an interminable amount of hot water, you can just heat that up in a loop and keep it going and just have almost an infinite power supply there. So there's a lot of interesting things going on in the space.
Just interested in kind of your trading, style and are you still trading the prop trading stuff? You still involved in that at Constellation, or is that's past you now?
Yeah, I'm a little bit done with that. I'm a little bit too old for doing that all the time.
But you've got a group that does that for you.
We do, and they hear my opinion all the time. So I send those decks out that I've sent to you in the past with the charts and stuff. And I love fundamental analysis. It gives me confidence.
What
And
about technicals?
So here was the thing I learned when I was looking at fundamentals. It tells a great story. I can enrapture you with supply and demand about natural gas at a cocktail party better than anyone else in the world. But there's no timing mechanism to get in and out of trade. It's just that simple. And I needed to find a mechanism that's going to work better. And, whenever, back in the day, whenever you talk about technical analysis of charts, there'd be some, wise guy talking about hocus pocus and magic and BS and blah, blah, blah. I was like, well, that's not what I'm in. I'm not interested in gimmicks. But I found a book from Princeton University, a professor there who taught statistics. His name was William Fuller. And he talked about the arc sine law. And he talked about how random numbers random numbers trend. And they don't have to go back. If you flip 1,000 coins and you get all heads the first 500, it doesn't have to go to tails the next 500. They trend. And I kind of caught my interest. And I kind of said, how am I going to prove this out? And I got to put a random number generator together, no simpler than on Excel. And I could have put a couple boundaries around it so it would look like gas. That was my goal. That's what I was trading at the time. And I started seeing these chart patterns, and I was like, oh my God, that looks like the stock market. That looks like crude. That looks like gas. And it kind of convinced me that random numbers do trend. And, it started me on a big path to figuring out technical analysis. And that was probably, oh my goodness, 30 years ago.
Mm-hmm.
And I've become a big fan of technical analysis. I've read many books on it. I've went to the school of hard knocks for profits and losses on it. And, I gravitate to things that make sense to me. Like truly your seasonal patterns make sense. And, if you want to take a radical extreme, like, sun phases make sense. And, September and October going down, you're starting to get dark in the mornings, it's starting to get cold, you get a little, you're not as optimistic as the euphoria of springtime. And that's the highest, most macro view. But there are certain patterns that I look at that just work.
Like what?
Like pennants and flags. Like,
Mm-hmm.
I love those things. And I know, they sometimes look like they're bearish or things aren't going well, but pennants and flags made me a lot of money. Now, personally and professionally. So, I love those things because it's getting ready to move again. Things are coiling up and they usually follow the direction they came from. Like the cup and sources are usually so long term. I'm not a big fan of those, but sometimes they work. So I look at them,
Cup and handle.
Yeah, cup and handle, cup and source.
You can tell how much you use that one.
Yeah, no, I don't use it much at all. But when you see it and you're like, okay, this makes sense, you keep an eye on it. And that's about as far as I go. I love moving averages. I've been doing a lot of work on the guppies. I know that sounds kind of crazy. And
What's the
guppies are this Australian trader that took smooth exponential moving averages, short term and long term, and compared them one against the other. And they they signaled like moving averages. Short term goes over long term. Things are bullish. Short term goes below long term.
Sounds like the MACD.
It is in a more kind of defined way, and I really like those. And they give you signals. Yeah, the daily charts kind of work, but the two charts that I really like are monthly charts. If I'm going to go buy a stock, the first thing I do is pull up a monthly chart and see if I'm going up, down, or sideways. And if I'm in a long-term upward trend, you use Newton's law of things in motion stay in motion. Things in a direction need a lot of energy to turn them the other way. And then you
So
start taking looking at these guppy patterns, and they'll confirm those moves for you. And like you take a stock like Costco, I'll use that as an example. That's been in a positive signal on a monthly chart for 15 years now. And it's like, whoa, okay. And I know I'm going against a lot of doctrine in the Wall Street market, but when you look at things like, take the average of the S&P, you want the average of the S&P. I just remember as a kid, average was a C. When I came home with C's, good things did not happen to me. So I had to do a little better than that. So at the end of the day, like, I'm always trying to kind of beat that average. And like, you take the Dow 30. There are usually 10 stocks going up, 10 stocks going sideways, and 10 stocks going down. And if you can pick those 10 going up or identify them, you're going to do well.
how do you
If you
pick
want
them?
to, I'll look at all 30 in the Dow or 100 in the NASDAQ or, a few hundred in the S&P and just kind of look at them that way.
Just you look at the ones that are undervalued, or you're looking at ones that are running away, or
I'll start looking charts. I'll just look at the charts. I'll kind of scroll through them and, I'll scroll through them and I'll say, hey, these 10 look interesting. So I'll focus on those. And then I'll go and I'll start fundamentals and I'll look at their balance sheet and their income statement and their cash flows. And, they'll tell me a story. And no matter what's going up or down, if there's a disaster in the financials, I probably stay away from them. But if I can kind of check a lot of boxes on the fundamentals and technicals, and the technicals confirm those fundamentals, it's hard not to invest in those things. And that
I
works.
find I find that combination of technicals and fundamentals with our seasonal overlay quite effective.
Oh, and then the seasonal overlay, like, I know over the years I don't do a lot of work on my 401k. You just put your money in and, it's going to grow. But at the end of the day, there have been a lot of times, come May, June, July, I'll go to cash and keep it that way till November, December until Santa Claus comes.
That's right.
Yeah.
So, you were talking about the things that are going up, keep going up. We got a market here hitting new highs, coming off some pretty tumultuous trading. Somebody said something about a bear market last night. I throw the flag. It was no bear market. It was a sell-off. But
It was a sell-off.
are we still strong? I mean, you were saying something about the charts being unstable. What are you seeing there?
I have a 3-year-old son, so I analogize everything in the world to my 3-year-old son now, right? You have a hammer, everything's a nail. And you look at the NASDAQ chart and the S&P, not as much the Dow, because that's been less volatile than the other two. But you see you almost see like this instability. You're at new highs, which is great news. But you see gaps everywhere, which when you're taking an index for 100 or 500 stocks, that's a bbig deal. Gaps higher, gaps lower. And then you see, things like, pauses and
Consolidations.
just consolidations, volatility. It just looks really unstable. I think what I tell you, it looks like, I'm putting a stool on top of my chair to get to the refrigerator like my 3-year-old does. And he may grab that chocolate milk, but man, it's a long way down when he, if he misses that thing. So, it just makes me a little bit skeptical. And I'm sitting there with an itchy trigger finger kind of to protect some of the gains over the last couple months.
Keep an eye on our NASDAQ best 8 months MACD sell signal, which is coming.
Yeah,
Yeah,
it's
I think
coming.
that'll be
Yeah, and then you have 3 months of it, and like then you can load up. Like you said on my show, 2026 may be a bit of a challenge, but and like you've been consistently like one of the most bullish guys I've seen. So it's
since
concerning.
since October 22.
Yeah, at least that. And
Well,
even before that, right? Before that, you were kind of like, oh, late in 2020, you were bullish too.
right. We got cautious, very cautious in 22. That's the midterm 4-year cycle stuff. But there was also other reasons. I mean, once Russia invaded Ukraine, it was there
You
was
had
some.
it. You had to pull back. Yeah, you saw the price of oil go up,
And then the stops and all the different triggers we have in our portfolio just started taking off. By the time we got to our seasonal sell signal in 22, we were stopped out of most everything anyway.
Yeah, and I think it's one of those things where you just heed your warning, and I'm gonna I'll lighten up and I'll look for opportunities to get into it in sometime and later this year or in 26 and kind of pick some opportunities that way. That's what I'm hoping for anyway.
So you're
You know,
thinking we're running out of gas here?
it's getting unstable. Like this can go for a while. Like this can probably go a few more weeks. Maybe it's August 15th and not July 15th. I
Mhm.
can see that. I can easily see that. But I can't see this thing just extending. I think you need to do work on the downside to clean up some of these gaps before you go higher. The old saying in commodities, all gaps get filled, and we got plenty to fill here.
Agreed.
So,
Um,
and then then you have other stuff kind of signaling trouble. Like you see platinum going through the roof, see gold going higher. You know,
Bitcoin.
yeah, Bitcoin, but that's just another speculative instrument. I got to tell you, one of the things that startled me the other day was I was going through the list of top ETFs, and I got to the top 25, and the Bitcoin ETF, IBIT, and I'm not
Mhm.
advertising, I'm just saying, was in the top 20 for largest ETFs. This is
Wow.
starting, that's kind of real. Like this isn't a couple of kids or, somebody taking a shot. This is real money. And he's, you're between the gold ETF, you're between an S&P balance fund. You got some big names in there that people are, subsidizing. And, you put a new high in today, which looks like the S&P and NASDAQ. It's a speculative instrument that people are really getting comfortable with. And I
It's
think,
almost. Go ahead.
good. No, I
No, no.
think I think one of the things we don't understand is, we live in a country where we don't have instability in our currencies, or people aren't looking to take our money away or confiscate it or anything. This is valuable stuff to a person in Hong Kong or somebody trying to hide money from their government or something like that, looking for currency stability. So most people in this country may have missed this, you know, but at the end of the day, it is a speculative instrument. And I think it's no different than an Nvidia or anything like that, except Nvidia pays dividends and makes things.
It's almost like a sentiment indicator, like a risk on indicator.
It really is, and it's open 24 hours a day, so you can get a better indication of it than say the Nasdaq, which goes to sleep overnight.
So, what about some of the other markets? I mean, your history as a commodities trader, energy trader.
Metals,
Uh,
metals are really strong here. I don't think that ends. I've had a long term view of gold that it should be at $5,000 if it wasn't for cryptos, and that like a lot of money kind of flowed into that. I think that upward trend continues. I think platinum has upside. I think copper has been impacted by the tariffs and things, but
yep.
that's still a market that's in big demand. You have a lot of demand for that. Silver, same story. You're looking at $38. That keeps quietly inching up. Well, gold's pinging 35 and, et cetera, like that.
Right.
Silver's quietly going to 35. I think those spreads are all out of whack. Platinum is way more rare than gold. Silver historically has been a relationship of about 25 to 1 to gold. It's now 100 to 1. So I think there are values out there. I look at natural gas and I look at, short term, it could do anything, right? The weather determines what natural gas is going to do. If it's really hot, the price goes up in the summer. If it's really cold, it goes up in the winter. If it's not, then you give it away. Just you have to evacuate storage. But you see some macro trends like, demand for LNG, internationally. You're looking at, increased industrial demand here in this country. You're looking at a lot of things like that. And you're looking at a 350, 360 price long term for the 10-year strip. That just seems cheaper than the cost of production. And that's an unsustainable figure. Um, so I think there are a lot of bargains to be had on the gas side of the business. Crude oil,
What's unsustainable?
the 350 price for 10-year gas, especially with all the demand coming online.
So you think that's undervalued?
I do. I truly do. That should be probably a 450 price. With profits, you're probably looking at 450 cost of production. And
What
there's
about
some,
crude?
crude's all over the place, right? You have about 5 million barrels of spare capacity in the system, which OPEC seems to be bringing out to support, the low energy prices, and please Donald Trump. And then you see, over under $60 or around $60 you don't expand production in the United States. You have a $60 price. So this is a double-edged sword going on there. So that could be choppy around it. What we did see with the Iran incident is, Strait of Hormuz is going to cost you about $10 or $12 a barrel if they try to close that.
Right.
And that's not a tragedy. That's not going to slow the economy down. You got to get over $90 to really slow this economy down. So, when you're looking at gasoline prices, are pretty cheap here. They're about $2.15 a barrel wholesale, a gallon wholesale. Heating oils are in that range, a little bit more premium going into the winter, but you have plentiful amounts of inexpensive energy here, which is very productive. So I like that. The dollar being cheap kind of concerns me. I think that's being challenged as the bellwether currency is concerning also, but that's down the road a little bit. Longer term, I think 10-year interest rate yields broke out of a 40-year downward trend about 2-3 years ago. And I think we're going to have problems with higher interest rates in the back end of the curve. The Fed can manipulate the front end as much as it wants and bring that down or up as much as it wants. But I think it's a supply demand based type of number in the 10 and 30 years.
Does the Fed really set the rates, or does the bond market set the rates?
In the back, the bond market does. The Fed has to go through extreme measures to move that bond yield. Whereas the front, they can manipulate that 3-month or 1 year pretty easily. And they do that. They do that often. They just have a lot of bullets to throw at it in the short term. But
what's your assessment of the Fed right now, the current Fed?
They don't know they don't know what's going to happen. You have the pull of inflation from these tariffs. You have a chance of a slowing economy. So you have these two forces that you need to address pulling you apart. So the one prudent thing to do is kind of leave it alone. And they lowered rates enough to flatten the yield curve and not invert it, which stimulates the economy just enough. And you see an economy that's chugging along. You don't really need to cut rates. You still see GDP growth about 2%. I think Q1 was an anomaly because of the imports and tariffs. And there was a massive amount of gold transferred from London to the U.S. It was huge buying of gold during Q1 this year. And that's not long term. So I think they're doing the right prudent thing right now. And they can always quickly lower rates. So
you're one of the few people who is not throwing the Fed under the bus. Everyone's saying they were too late with the hikes when inflation was running out of control with a transitory line, and now they're going to be too late. So I appreciate you saying that.
I got to tell you, you go back to the transitory. I think it was transitory. I totally agree with that assessment. And people want to get ahead of this or raise rates and stuff. But we were coming out of the biggest recession since the Depression. People forget we had 20% unemployment. We shrunk as an economy by 10 or 15%. That was crazy stuff. And you need to keep your foot on the gas because you were way more concerned about that than inflation. And most of the inflation we got was just a market signal to restart these processes. Think about it. We went to negative $37 a barrel on crude oil
for a minute.
For a minute, but that was a hugely powerful signal to say, shut off your taps. Like, this is crazy. We can't contain this stuff. It's going to flow out in the streets. And the market listened, and then you needed a signal to kind of turn it back on again. And turning it back on is a lot more difficult than starting it up. You can ask any producer of that. I'm not a producer, but you talk to these people and they're like, oh, this is a terrible problem. And then you have the Ukraine war on top of that. That all calmed down. I just don't think it was as tragic as it was. Lumber was another reaction. You didn't have enough people cutting down trees, and you had a big surge in building demand. But that went away too. Your lumber price is about the same as it was before COVID. These all went away, and not as quickly as people wanted. And I know hamburgers at McDonald's are still more expensive than they were, 10 years ago, but that's a shame.
My Peruvian chicken downstairs in White Plains just went up from $17.50 to $19.99.
Yeah, it just has to go up. I used to pick up my nephew from grammar school, and there's a McDonald's right across the street. So I take him to McDonald's, and we buy a few bags of burgers and fries and shakes and all that crap. And it used to be $25, and now you go in there, it's like $75. You're like, dude, that's real money. Let's just go to dinner. Grab the family. Let's go to dinner. It's kind of crazy. What else we got for markets? So, other than that, you know, uh,
So you're talking about the tariffs, and I'm going to get into a little bit of what you think going on with the politicians. But I saw a news story today that the Treasury posts unexpected surplus in June as tariff receipts surge.
yeah,
Is that you
that
saw
makes
that?
well, you look at statistics, right? Our three biggest trading partners are Mexico, Canada, and China. Not in that order. China's number two. Um, and the thing about it is, Lawrence Summers said this stat, and I couldn't believe it. He said it about 3 months ago, and I looked it up. With the exception of China, about half the stuff we import is so we can export stuff, which seems crazy. And then you look at it, and look at what we do with Canada. We 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 uh, we import about 5 million barrels of oil from those guys a day. We take that, run it through excess capacity on Midwestern refineries, and we ship it off as gasoline and diesel fuel, a value added product. You look at the crack spreads at 20, $30. So you're buying this stuff at a $10 discount because of their specifications on the crude. So the $60 price is really 50. You're running it through your refineries and selling it at $30 premium. So you're making as much money on the oil as you bought it for. You're doubling your profits. It's hugely lucrative. Like, we add tons of value to the products we buy. Like, why would you look to hurt Canada on that? And we do it 5 million barrels a day times 365 days a year. You get into the trillions of dollars that we make on this thing. Why are you going to hit these guys?
So
Canada and Mexico are basically set up to serve the United States. And they will never buy as much stuff as we have because combined, their economies are about a tenth the size of ours. We have so much money in this country. It's ridiculous.
so then what's your take on all this tariff stuff?
I think it's terrible.
Yeah.
If you want to punish China, these guys, we made a mistake with China. We opened ourselves up to them. We subsidize and we put capital in, and they're trying to kill us, right? They're trying to take over Taiwan, blow us up, militarize like crazy. They want to hurt us. And the thing about China that differentiates itself from, say, Mexico or Canada is they supply us with over half our consumer goods. So it's stuff that you and I buy, whether it's a pair of sneakers or tiki torches or whatever it is. The vast majority of all our imports from China are consumer goods, and they dwarf any other country in the world. And those are the guys you should be going after, not Vietnam, who's an ally of ours and who produces.
Why are they doing it this way?
The Wall Street Journal, which has supported Trump and is a conservative newspaper, said it was the dumbest thing they ever saw. And then they had a new opinion page and said they may have understated the fact it was the dumbest thing they ever saw. And
Maybe dumber.
yeah, maybe dumber than they estimated. And I'm not trying to pick parties here. I'm not trying to go Republican, Democrat, blue, or red. And I'm just like, this is crazy. We have a good deal going with Canada and Mexico. Why are we hurting this? And honestly, we're at 4% unemployment. Like, everything I read when I was a kid in college said that was full employment. Everything else is kind of transitory in the middle. People going from one job to another. And you sit there and you're like, we're fully employed. Now we're going to bring back like tiki torch making processes. We should be going upscale. We should be going and making the jet engines, the AI chips, the big stuff that makes us big money, not the commoditized product that anyone else can make.
We're never going to get the manufacturing base back here. It's just not possible. People in this country aren't going to work those jobs for that kind of money.
I don't dream about my 3-year-old screwing on a bolt on a car at Ford Motor Company. It's not my dream.
No.
I want him to be the smartest kid or work for you one day or whatever it is. I don't want him. And then I have a buddy of mine who owns an American-made clothing store, and he's done well with this move to American-made products and move away from China. But at the end of the day, no one's talking about dye factories or shearing sheep, to reindustrialize these processes. And you're like, that makes sense. I don't want to do that's like low value add.
We're not going to make socks here.
We do make socks. We make a lot of socks, but we're not making all the socks here. You can still buy the bundle for $8 at Costco. He can sell his fancy, $10 pair of socks, which are some of the most comfortable things I've ever put on my feet. So I'll plug him. It's an American Trench. Go buy some socks there. You'd be happy you did. And he has some beautiful clothes and high quality, but it's just not the cheap stuff you buy at Walmart or Target or anything like that.
Final thoughts on geopolitics and such. I know as an oil patch guy for years, you definitely had your eye on the Middle East, and what's going on there. Are things firmly quiet there? What's your take on Iran and what's happened there and where we stand?
Well, one, I think when you deal with people in the Middle East, you have to deal with power. And Trump's bombing was a power move. Israel's attacks on Iran were power moves. And then they've hurt Syria. They've or hurt the rebels in Syria. They've hurt Hamas. They've hurt Hezbollah. They've hurt all these guys. Standing up to the bully always works. So that's a good thing. The Middle East has gone all in on Trump and his administration, whether it's giving him a plane or releasing a lot of oil. They've released about 1.5 million barrels since Trump became president. That's going to keep prices low and make Trump successful as president. Because my belief is energy equals inflation. If you have low energy prices, inflation is going to be kept at bay. So you have all these people going all in, and whether they're our enemies or friends, they all seem to be talking to us. And I think we have some power in the Middle East. So I think finally that's a good thing. And I think Trump's going to do what it takes to keep Iran from getting a nuclear weapon, which is comforting too. He may have obliterated it, he may have not. I wish that was a word that was common when I was a kid. Like, I obliterated a fastball in Little League, or I obliterated the quarterback in football, whatever it is. It's just a cool word. But I just think these guys know he means business, and I think they're not gonna mess around as much anymore.
All right. All right. What else is on your radar? Anything I missed?
I don't think so. What
Stocks, the market. We covered a lot of commodities.
Yeah, I don't know. I think these tech names are kind of amazing to me. Like they just go up. I know playing around with some of these stocks. Like I'll buy a couple of shares, just keep an eye on them and see what they do, and all of a sudden these things turn into real money. I think it's a remarkable time to be in the markets and being invested. And I hate to kill the golden goose with a lot of tariffs and other drama and nonsense that we seem to be kind of focused on now.
All right, my friend. I'm going to let you get back to your Friday afternoon in the hot summer down in Baltimore.
Yeah, it was great. It was great being on your show. Thanks for the privilege.
Always good chatting with you. Well, hopefully we'll get some more opportunities to follow up on this market stuff.
I look forward to it. You take care. Have a great weekend.
All righty. Be good.